Hello my friends, and welcome back to another video here on Rebel Trading. I hope you all are enjoying your day. In today's video, I got a 5-minute scalping strategy. I'll be showing it on the US dollar Japanese yen trading pair, but it is good for crypto, Forex, and stocks. It also seems to work on different time frames, but I found it works quite well on the 5-minute. Also stick around to the very end because I'm going to be back testing the strategy to see exactly how profitable it can be. So today's strategy involves the use of two indicators. The first indicator that we're going to be using is the multi-EMA. Second indicator that we're going to use is the Vervoort Heikin-Ashi long-term candles. It's going to be the very first one. We're only going to be using 3 different indicators for the EMA, so we're going to uncheck number 4 and 5. Also feel free to change the colors due to your preference. We're also going to go to inputs. We're going to change the EMA 1 to 50. EMA number 2 is going to be 100, and then the third one is going to be at the 200 level. The bottom indicator, we're not going to change any of the settings at all. So this is how your chart should look like at this point. If you guys are liking today's video so far, I'd greatly appreciate it if you would smash the like button. We've also released our free Telegram trading channel where I show you some of the trades I make throughout the week. It's free to join in, so you got nothing to lose. So go ahead and click down in the comment section below, and I'll see you in the group. So this strategy works as a retesting strategy. So for a long position, what we're going to be looking for is for the 200 EMA to be at the very bottom, the 50 to be on the top, and then the 100 EMA has to be in the middle. After that, we're looking for a retest of the 50 EMA. So you need to see price action pull back to the 50 EMA, but it cannot close below it. As soon as that happens, the trade is invalid. So as you can see right here, we have the 50 EMA on the top, the 200 at the bottom. We did have a retest of the price action, but we did not have a full candle close below the 50 EMA. After that, we're going to wait for the first bullish green candle to close above the 50 EMA. And if our bottom indicator is in the green, we can take our long position. So we're going to open the trade right here. The stop loss, you can set either a few points down below the most recent swing low position, or you can set it at the middle EMA. So it needs to be set at the 100 EMA. After that, I found a risk-reward ratio of 1.5 to work quite best for the strategy. If you intend to hold on to it longer than that, you need to move your stop loss up to prevent the trade from losing. So at least trail it with the 100 EMA, but it's best to open it to move your stop loss up to the entry position. As you can see, we have our first winning long position. Of course, something to look out for is on top of trading news, you want to avoid any candles with long wicks. Also, if you see the EMAs to begin flatlining a little bit, normally it's best to start to avoid the trade because that indicates that price could reverse against your favor. All right, you can see a retest of the price action right here. Although this is a very weak candle, so I would not have taken the trade on this one. But we can see right here, we had another candle that did wick down to the bottom EMA, and then it closed above the 50 EMA. And our bottom indicator also is in the green, so we're going to take our next long position. The stop loss a few points on the most recent swing low position, and with the 1.5 risk reward ratio, we hit our next profit target. All right, so as we can see here, we have the 200 EMA on the top with the 50 EMA on the bottom. You want to wait for the price action to re-enter into the 50 EMA without having a candle close completely above the 50 EMA. So as you can see right here, we had the price action touch into the 50 EMA, and then we're going to wait for a red candle to close. After our bottom indicator is in the red, we can take our short position. So we're going to set the stop loss a few points above the most recent swing high position. And again, with the 1.5 risk reward ratio, we hit our profit target on the short. I'll now be using my backtesting software to see exactly how profitable this strategy is. Stick around and see what we find out. Not as good compared to some of the other strategies I've backtested, but I'd still say is quite good. Something that really helped with the strategy was the fact that we had an 11 consecutive win streak. This helped a lot with the UJ trading pair because sometimes when Japanese yen pairs are trending, they tend to go in that direction for longer periods of time. One of the challenges I faced when using this strategy was that quite a handful of the trades only hit the 1 risk reward ratio, and I had to move the stop loss up to prevent the trade from losing. There were also times when the only profitable types of trades occurred when you had to take multiple trades back to back. Of course, the trades ended up hitting their profit target, but if you're using higher leverage, this is really not ideal for the trading strategy. I also think that the strategy might work better on a higher time frame, such as the 15-minute or even the 30-minute trading time frames. You wouldn't be able to make as many trades in this time, but the accuracy and profitability, I would say, are still quite good. If you guys found value out of today's video, I'd greatly appreciate it if you'd smash that like button. Also, go ahead and check out the Telegram trading channel. It's free to join in, so you got nothing to lose. Trade good, trade smart, and I'll see you guys on the next video.